Good morning, Trinidad and Tobago, and welcome once again to the Bourse Report. Many things to talk about. The results of Scotia for the first quarter is out. The results for TCL and for Grace Kennedy are out, as well as TTNGL, that latest IPO from the government of Trinidad and Tobago in respect of PPGPL. So, with limited time, we will cover TCL and we'll cover Grace Kennedy. But let me say very quickly that TTNGL has declared a dividend of $1, taking it to $1.50 for the period over which it has been listed on the Trinidad and Tobago Stock Exchange. We'll talk more about that and the implications for it next week. We'll set aside Scotia with its quarterly results, and let's go to Grace Kennedy. First of all, the 5 top performing shares in terms of advancement in capital value on the Trinidad and Tobago Stock Exchange are cross-listed shares, including Grace Kennedy, as well as NCBJ. So what does that mean for you? Really what it means is that it is a play, an arbitrage play in part on currency, where people can buy shares here, move it to Jamaica, and seek to get a best currency sort of play. We'll tell you more about that as we go along, but that is one of the contributing reasons, though not all. Let's look at what is happening now with Grace Kennedy. Grace Kennedy's results were diminished somewhat because compared to last year, their TT dollar earnings per share was 45 cents, whereas in 2014 it was 53 cents. What does this mean essentially? When you look at the first graph, what you will see is that while revenues have been going up for the company, the net profit margins have been falling, as you would see in that blue line, as it comes down from 5.36 in 2014 to 4.08. So while these revenues have been going down, if we look at our other graph in terms of Grace Kennedy, what you would see is the earnings, while the earnings have been going down, the price relative to earnings have actually been going up. So we go to our next graph, and what you would see in our next graph is that figure showing that the P multiples, which really establish price to the earnings of one share, has been going up, trending upwards from 8.6 times in 2015 to 11.4 times trailing in 2014. Trading at $5.13 per share TT, and with that 11.4 multiple, the stock is traded more or less in line with the industry trends and the stock market trend for comparative conglomerates. It's paying a dividend of 2.6%, which is more or less in line with the other players, Massey at 3.7%, which is the highest, and Macal at 2.04%. On the basis of these various factors, we hold a neutral position on Grace Kennedy at this time, in spite of the 26.7% price appreciation to date from this particular company. Let's move quickly now to TCL and see what's happening with TCL. The company has shown amongst the best results that it has experienced in the past 5 years, so that the earnings per share of TCL this particular year ended 2015 is $1.19. When you look at that first graph on TCL, what you would see is the earnings before interest, taxes, depreciation and amortization is up to $588 million, as well as the margins have been growing on the TCL, as you would see in that blue line. Generally, operation efficiencies have been up, and that is reflected in fact that whereas for several years now we've been seeing impairments in terms of the use or non-use of clinker, that has been eroded or eliminated in this particular year, as you would see in the next graph, where historical impairments have really come down. Those are the blue figures which show impairments over the past several years, even last year being $156 million, apparently cleaning up the company. When you look at some of the one-off gains and so on that have come from the financial restructuring, we expect that without that, one-off gain, the earnings of the company will be about 60 to 70 cents from the $1.19. Within that sort of range, and even though the PE multiple is at 3.1 times at this point in time, which is low, we hold a neutral position with regard to this company at this time. As we see, basically, one, improved efficiencies, but two, operating in markets where 41% of sales is in Trinidad and Tobago, and another 30% odd is in Barbados. These countries are going to experience challenges in their construction sector. So unless TCL can reorient its exports or its production to other markets, then there are going to be some challenging times for this particular company. Have yourself a wonderful investment week, and look for us for far more details on these and other companies at bourseinvestment.com. Look for us in the local newspapers for some more details on the daily newspapers, but I said even more details at our website, bourseinvestment.com. For more information, call us at 628-9100 or email us at boursefinancial.com. Have yourself a wonderful investment week. This is Subhash Ramkilawan for the Bourse Report.